All right, morning everyone. Welcome to another episode of Trading Bitcoin with your host Tone Vays, coming to you live early in the U.S. This morning, and it is Wednesday. What's today? 26th. I believe it's August 26th. I always have to double check the date. Every date is like the same these days. Correct, August 26th. A lot of work, so let's just get this out of the way early. And tomorrow I am off flying to BitBlock Boom. And so maybe more streams from the airport like we did back in the day before the world changed. All right, let's go to screen share. And here is BitBlock Boom. If you're around Dallas, Texas, I believe there should still be tickets available. I'm not expecting a lot of people. The speaker list has been dwindling and dwindling and dwindling, and I still have to make my presentation for this event, and I still have to finish an article that the presentation needs to be on, and hence an unreasonable amount of work. Okay, let's just go straight into the Bitcoin chart, and we'll pick up where we left off yesterday. By the way, if you guys didn't see last night's stream from the Bybit trading competition, we spoke with Salsa, who is in the lead out of 10,000 people in that competition. And I'll have a few comments on that a little bit later, but hopefully you guys watched it. If not, go back and watch it. It was a good episode. But there's a couple of things I want to reflect on from that show. Okay, let's go to Bitcoin. We're going straight to the active weekly chart, because once again, another week is close to coming to an end. And right now, the weekly candle is completely neutral to me. This is, I can make the case that it's a bearish candle. I can also make the case that it's not a big deal. So let's just dive into it real quick. What makes this candle bearish? Well, the main thing that makes it bearish is the fact that it's a red candle. The opening on Sunday night was higher than the current price, and that makes it a bearish candle. It is a second candle in a potential bigger pullback. And that is, let's look at the oscillators. We have the RSI, which, like I said, is not a big deal unless it's starting to go below this green line. As long as it stays above this green line, we're still generally bullish, and I can certainly see it bouncing off this green line and going into overbought territory, which probably means Bitcoin is headed to $13,000 or $14,000. If it goes below this green line, then obviously there's a bigger pullback that's going to take us all the way down to approximately 10,000 or a little bit lower. All right, so let's look at something else. Sorry, getting distracted for a second. Looks at the MACD is still very, very bullish. That's not a concern. And the CMF is also pretty bullish. So these are pretty bullish signs. The parabolic SARs are still bullish. You are above all of the moving averages, and all the moving averages are rising. You have now spent 1, 2, 3, 4, 5 full weeks above the breakout of the trend line, which is also bullish. So there's lots and lots of bullish elements. Now, if we can manage to creep back up and close above this Fibonacci line of 11,570, that would be great, because that just keeps us above this cluster of weekly closes. If we can muster enough juice to get back above 11.6 by Sunday night, I will be very bullish going into next week. But the closer we are to this moving average, the more bearish I'll be going into next week. I was bearish going into the current week based on, you can look at how this candle is. The shadow at the top is significantly larger than the shadow at the bottom and the body. So this is a pretty bearish looking candle, and I'm not surprised that we made a lower low. Now, if this candle looks the opposite of this of last week's candle, and we have a long shadow at the bottom because we pulled all the way back up to 11.6 by end of week, I will then be bullish going into next week. Okay. Wow, we don't have a lot of viewers on. Very few. Oh well. Maybe it's too early. Or maybe it's a fourth video in a 24-hour span. No, wait, 12-hour span. It's my fourth live stream in the last 12 hours. That's kind of insane, actually. But hey, thank you for staying with me, guys. The daily chart, though, the daily chart is looking a lot more bearish right now. The daily chart broke the parabolic SAR, and this is not a great looking pattern. We really need to get above these highs of 11.7 for me to be bullish on a daily time frame. The weekly time frame makes me bullish at 11.6, but the daily time frame, I need 11.8. That's a little bit different. It's a little bit higher. Normally, it's the other way around. Normally, the daily chart is less sensitive than the weekly chart, but not in this case. Or I'm sorry, the daily chart is more sensitive, so it doesn't have to go as high or as low to give you a signal. I've been really paying attention to the Arun only because it gave you the absolute perfect trade over here a few days before the breakout. And looking at it now, that's my line in the sand. If the green Arun line with a 25 base, which is the official default, well, not the TradingView default, but the creator's default, breaks the 60% barrier, I would no longer be bullish based on this indicator in the market. But right now, it's got a little bit of a margin of error. Now, I had lowered, this is not a static line. Right now, for me, it's 60%. Over here, I moved it to 40, if you guys were watching me live, because the environment was very different. If we consolidate some more, this will drop low enough. And then if we drop, then we can have the opposite of this. I love it when this crosses below the 20% line. That created an absolutely perfect trade last time. I immediately pointed to it. And we will see if it happens again, but this time in the opposite direction. So I am still keeping an eye on that, mostly because I'm curious. The BitMEX funding rate, which I also have trouble explaining all the time, has flipped to the downside, and that is basically favoring the bulls right now, but not in any significant way. So we wait and see, but this also creates, it also removes the over bullishness condition, giving you another shot at 13 or 14,000. So this is a pretty good sign for the bulls that we are consolidating, but people are not overly bullish. So so that's good. We were able to alleviate this over bullishness through consolidation. That is actually a really good sign for more upside. Now, unlike the weekly MACD, the daily MACD is a complete and utter disaster. So this is really, really bad. And if it crosses the zero line, it becomes way worse. I'm also keeping an eye on the ADX. And the ADX is not yet giving you a bearish trade, but that is the more likely outcome in the near future. So not really much to say on this yet. And the CMF is very, very positive and bullish. I've been looking at the 1 hour chart. I've been skipping the 4 hour chart. We're going to stick with the 1 hour chart. So yesterday, I put in this red line indicating that if I was a short-term trader, but not a scalper, Salsa that was on my show last night, he's a scalper. I'm not going to say he always goes 100x, but he's pretty damn close to that. So relatively speaking, he's between like 20 and 70x probably all the time. That's not my style of trading. I mean, I've done 20x trades before, even as swing trades. As you guys know, famously from a few years ago, that ended up causing some issues. But I'm not a scalper. So even using the hourly time frame, I still called for a short trade right here on this hour. Yesterday's video around 9 a.m. Eastern time. And if my memory serves me right, I said that I was looking for a fall somewhere between these two red lines. And I'm sure I said in the vicinity of 11,100, 100, 200. That's exactly where we fell to. Now, if I was trading this hourly chart, would I have been able to perfectly time the exit on this short trade? Absolutely not. Based on this hourly chart, there would have been no reason for me to assume that we are going to reverse from 11,112 or wherever the hell we reversed from. Now, for me, I like the MRI. And this candle here with the green arrow basically would have gotten me out of that trade at worst case scenario if my stop loss did not get hit on this candle. I also could have probably gotten out on this candle when I saw the big up move with a giant volume spike. That is not a very good for further downside. We were also looking at the order book, and the order book wasn't exactly screaming, stay short, stay short, stay short. The order book was actually indicating that a bounce is imminent. I am on the order book with Trader, TRDR. Joe couldn't make the show last night, but I'll have him on again soon. So Trader is a platform. I guess it's similar to TradingView. You don't, I don't think you can trade directly from it. It's more of an analysis platform that gives you very good order book data. So you can get like a 1 week free trial or something. So if you want to support, please use the affiliate code and check it out if that's for you. This is not loading at all, so maybe I'll just refresh. My prediction of Bitcoin end of year. All right, this doesn't want to load. That's okay. My prediction of Bitcoin end of year, it's probably my computer. It's not the platform, guys. My prediction of Bitcoin end of year. I'm going to still stick with my prediction for Bitcoin end of year as I did early in the year. So if you go to my blog, hopefully I'll publish another article. It's like a once every 6 months I publish something. So my last article was about food. But the article before that, yep, those are some good steaks. Here it is. Crypto 2020 Outlook. And somewhere at the bottom there, okay. So let me see. Do I mention it? Somewhere in here. Here it is. This is why I am also expecting Bitcoin price to spend the majority of the year below 10,000 and close out the year in the vicinity of 10,000. We will see if I'm right about the first part. At the moment, it's 50-50 because we did spend the majority of the year below 10,000. We didn't break out. Well, maybe not the majority, right? We broke out in August. So we were below 10,000 for 7 months, right? We did break out in August, right? Let me see. When did we break out? We broke out above 10,000 in last week of July. Okay, so beginning of August. So did we spend the majority of the year below 10,000? It's about 50-50. So if we go back below 10,000 for like a month, then it won't be deniable that I was right when the year started. So when I wrote that article, Bitcoin was like 8,200, rising to 10,000. So we hit 10,000 in February, but I said that we would spend the majority of the year below 10,000. And then between February and basically the beginning of August, we were below 10,000. And so far I'm 50-50 on that call. But then I also say, and close out the year in the vicinity of 10,000. So what does vicinity of 10,000 mean? I don't know, give or take $1,000 or something. So if we close the year at current price, I'm right. That's the vicinity of 10,000, whether it's a little above or a little below. So I have no reason to walk away from that. So I'm going to play it a little safer. I'm going to say Bitcoin closes the year between 9,000 and 12,000. Where are my major support levels above 10,000? There are no support levels above 10,000. Above 10,000 is all resistance. And we have to break the resistance before we make support. The best support above 10,000 is 19,600. That's the best support. If we, just like for gold, the best support is 19,020, but unfortunately we didn't go high enough to make the support. You can see how it was support a week ago, 2 weeks ago, whatever, August 12th, 2 weeks ago. But this support's now breaking, which is very bad. The reason the support is breaking is because we did not go sufficiently high enough to get enough people invested in gold to make this significant support. This is why when Bitcoin went above 13,000 for the first time in 2017, it went so far above 1,300. It went so far above 1,300 that 1,300 was going to be the absolute low level support. But I wouldn't even get to it. We only got down to 3,000. So had gold gone to, say, 2,200, I would have been very confident that gold will not go below 1,900, probably ever again. But because we did not even get to 2,100, that does not make 1,900 good support. Bitcoin will have the same problem. If Bitcoin can get sufficiently above 20,000, 20,000 would be amazing support. 14,000 is decent support as well. So this area here will probably be decent support, but it's just a little bit weird. In a perfect world, Bitcoin goes to at least 30,000. And if Bitcoin goes to at least 30,000, then 20,000, well, even at 20,000 becomes tricky because we kind of spiked up there. We didn't really have any significant closes there. But I still think that 20,000 could be amazing support as long as we go above 30,000. If we don't go above 30,000, if we only make it to 25,000 at breakout, then 20,000 is not good support. Just like gold support is failing right now due to the fact that we didn't go up high enough. I hope that makes sense. Well, gold sub 1,000 was not a wrong call because you don't understand percentages. I was calling gold sub 1,000 when gold was like 1,500, and gold made it to. See, you didn't know me back then. So when I was calling, the big falls in gold, I was off by very, very little. And the other problem that a lot of people have is I became a huge gold bull right here the moment we broke 1300. A person's analysis is only as good as the last time they said it. Anything I say today is completely irrelevant if I say something tomorrow. So anyone that holds any analyst or trader for what they said in the past, if they've said something since then, that person should just not be trading or watching people or following people. It's when you hold on to bad ideas. Like, for example, I give Doug Casey a lot of shit because he was wrong 40 years ago and he never changed his mind. That's, I can show you an article from 40 years ago where he's talking about gold going to 5,000. And at no point in the last 40 years has he ever been not a bull in gold. So that's a person that's been wrong for 40 years. I became a gold bull in June 2019. But yeah, when we were falling to 1,044, of course I was bearish. Why would I be bullish? We're continuing to fall. But those of you that actually watch this channel know that I've been a huge gold bull since that episode with Tyler Jenks, where we both became huge bulls at the break of the Fibonacci line. Any chance you can do a better job explaining cross leverage than the guy last night? I can try. See, this is the thing that people don't understand. It's probably a good transition. Let me just finish talking about Bitcoin short term. Sorry. I can try to see. Here's the thing. When the crypto exchanges make up their own definitions, it becomes very difficult to explain them. And it makes you look like an idiot, not able to explain them when you're able to trade it. And good traders don't make good teachers. And good teachers don't necessarily make good traders. Good drivers don't necessarily win the Indy 500. It's different type of driving. Your driving instructor is probably not a race car driver. And your race car driver will probably not going to be a very good driving instructor. So there's a lot of things you need to consider when listening to certain people. And I do want to talk about that stream. Just because someone is a very good trader at a certain strategy doesn't mean you can do it. For example, Ugly Old Goat has turned 2 Bitcoin into like 30 Bitcoin, and then he withdrew it all and he went back to 2 Bitcoin and he turned it into 30 Bitcoin again. And people are and he's making every trade public, and people are following him and getting wrecked and don't understand why and are angry at him. Like, just because a person can trade with a ridiculous return doesn't mean that you can do the same thing. It just doesn't. And thinking that you can do thinking that you can win the Indy 500 because, I don't know, Dale Earnhardt Jr. gave you a few tips is the wrong way to think about trading. Well, yeah, wherever the gold breakout was it 30? It was 1375, 1380. Yeah, I just said 1300. It's the number I remembered. I mean, we were talking about going bullish at break, so it's not like I was a bear here. It was mostly, hey, this thing is breaking out of like a giant cup and handle, and it's getting dangerously close to an important breakout. So you go neutral here, and then you go full bullish there. Okay, a Bitcoin short term. So I was bearish as of this red line, and this is a very critical area. As you can see, and go back to my video yesterday, see this support has now clearly become resistance. Now, was I bullish Bitcoin 30 minutes ago? The answer is yes, I was. Because why was I bullish Bitcoin 30 minutes ago, which I didn't even say? I have no reason to lie to anyone. This is a very honest channel. People think that like I somehow randomly became famous in crypto. No, I became famous in crypto because of professionalism and honesty. That's the number one driver, and being competent in what I'm talking about. So right here, why wouldn't I be bullish? We are at resistance, but we are at resistance for the second time. I was not bullish here. I was asleep, but I was not bullish here. Here, I'm more bullish because we are approaching it for the second time, but we're getting rejected again. So where do I become a bear on the price? Well, I become a bear here. Right there. Oh, looks like we crossed that line for a brief second. And now here we go again. So I would be more comfortable with a short trade right now than a long trade. But my stop loss is very, very, I wish I got to this candle earlier. But let's assume I'm taking the short trade literally right now. It's the same exercise we did yesterday. Let's assume I'm taking the short trade right now. I need to make this line red, but now I'll have too many red lines, but that's okay. My stop loss is right here. This is very, very clear to me that the moment we break above this resistance, I'm no longer bearish. But this rejection is making me bearish. I'm not looking at other metrics. I'm just looking at price action. If you're a trader, you gotta, keep an eye on other shit. So this needs a different color. Actually, no, that can stay with the same color. This needs a different color. I would actually love to see the order book, but it's not loading for me right now. So I don't know if the order book, like the order book kind of scared me a little bit on my short trade, but the short trade clearly worked out. So the order book is not, it's not the end all be all. It's just another tool. And this consolidation is kind of bullish, but at the same time, we have now spent the most time we've had this entire month below that support line. And that is not bullish. So right here in early August, we also spent about the same amount of time below that support line. But we got to that support line. It took a lot of energy to get to that support line. We had to fall a long way, and it was pretty much straight down. So over a 2-day span, we fell 8% over a 2-day span. Oh, this is also August, so we have spent some time below the support line. But we haven't had the support line yet, so this is the first one. And then this time, we did not fall this much. As you can see, we fell half that. Fell about 5%, which is still substantial. But to me, this is a way more bearish environment than this was. And also notice how this last time we were hanging around over here, the second time we hit the support line or resistance line at this point, we broke it on that hourly candle, which is not the case right now. Right now, the candle that was should have broken the resistance line got rejected and rejected hard. So here we are. All right, a quick peek at the S&P futures. Any update on your 60K Bitcoin next all-time high prediction? I don't think it was 60. I mean, I'm leaning like 45. I think Bitcoin is going to struggle to break 50K. It's a lot harder. People think that Bitcoin is going to go up, 10x so easily once it breaks 20K. That's not true. It's a lot harder to move the price when the overall market cap is so big. Yeah, I mean, if Apple gets in, then maybe, but I agree. We are in the beginning of a new bull market. Not so much the beginning. The beginning of a new bull market, I mean, started, I don't want to say started when I turned bullish, but I turned bullish on March 13th. I became a bull on March 13th. I'm a bull from here on out. Oh, of course, 20K is possible this year. I just don't think it's likely. Certainly possible. I mean, maybe in a bear on Bitcoin ended March 13th this year. March 12th, 13th, 14th, I don't know, one of those days. Well, right after the crash. The day after the crash, the 3,800, I became a bull. That's the day. That's the first day I became a long-term bull. And I became a bear. I became a long-term bear January 10th of 2018. And I became a bull March 13th, 2020. That's when I became a bull. So here's the S&P 500, and we're consolidated. We've been consolidating since last night, so nothing really interesting is happening. All right, that's it, guys. I'm going to talk about leverage. I'm going to talk a little bit about last night's stream with Salsa. I know it sounds funny. I got to get his Twitter handle up. And what was I going to say? Okay, so if you want to support, please check out the affiliate page. And if you are interested in videos, yes, I have a risk management video. Yes, I charge money for it. Yes, there are free risk management videos on the internet. No, I have not watched those free risk management videos on the internet. And because I have not watched them, I cannot recommend them because I have not seen them. I cannot recommend something I have not seen. If you can find risk management videos on the internet, please watch them, and I hope they are good. My risk management video talks about risk management in general, not related to a specific exchange. Okay. Now, a couple of things about last night's video. We're going to open up the price of Bitcoin. Yep, there it is. We're dropping. So like I said, to me, this is a bearish look. I can go to a 10-minute chart. Look at this perfect rejection. I did not move this line. This line has been there for weeks. And my stop loss would be right at that line. And I would probably start to move it even lower at this point. So I normally look at the 4-hour chart on this time frame, on this tab. And that's not a great look from a 4-hour time frame either. See, you can see how we spend a lot more candles, bodies, below this support line. That's not good. And if we approach this line, we will do the same thing all over again. It sounds crazy that Bitcoin could fall below 10,000 considering how much hype Bitcoin has right now, but you can certainly do it. Okay, so, and by the way, the moment this goes down, I'm gonna ballpark it here. The moment this price goes down below 1150, I would below 11,150. Sorry, the moment this price goes below 11,150, there is no way in hell I would be in this short trade without a break-even stop loss, or I take profit. Like, there's no way I would let this trade lose me money if it goes below 11,150. I may do it before that, but I would not. Okay, let's talk about yesterday. So yesterday I had, let me get his Twitter handle. I forgot to show his Twitter handle last night. I like the guy. He's more like a kid, 22 years old, but I liked him. It was a good convo. I think Crypto Face was a huge fan. But yeah, but when you see a return like that, you're impressed. It's impressive. I'm grabbing his Twitter handle. Why is this not doing anything? All right, anyway. So Salsa trades a very short time frame. Let's keep that in mind. So he trades, like, I was trying to ask him like what time. He probably doesn't even look at candlesticks. I'm not sure he does or not, because I was talking about the 1 minute time frame and I'm not sure he understood what I was talking about. So people were jumping on me for not understanding what cross leverage means. I'm not sure he followed when I said 1 minute time frame, and that usually means 1 minute candles. But if he doesn't look at candles, then that's not how he trades. So he wouldn't have understand what I meant. And he doesn't have to. Everyone has their own trading styles. So he's a scalper, which means he trades. His trades can last literally 3 minutes. But that's what a scalper is. And that's not my style of trading. There are, I don't want to say infinite, but there are hundreds of different trading styles, thousands, tens of thousands, lots of trading styles. And he decided to be a scalper. And he's a very good scalper, and his returns prove that. Now, just because he's a very good scalper and he can make good money with that, that doesn't mean that you too can be a very good scalper. They're not, it doesn't translate that way. Just like because Bill Gates and Mark Zuckerberg dropped out of college and became what they are, doesn't mean that you will become what they have become by dropping out of college. That's not how life works. So this is not how trading works. And that's the one thing you really need to take away from that conversation. Also, keep in mind that his account in the competition was down 50% before he was able to make 3,600%. At one point, he was down 50%. So that is also something that he was able to manage through his risk management. But if your trading is not his style of trading, a 50% drop in your retirement account, for example, is devastating. So not all risk management is equal across different levels of trading. So you have to keep that in mind as well, okay? There were lots of things in that interview. Now, the concept of cross leverage, not only have I never heard of that in all my years of trading traditional markets, the concept of cross leverage didn't even exist until recently. So in the early days of crypto trading, even when probably before 100x came along, or maybe even after 100x came along, the name cross leverage did not actually exist. It was just leverage. Okay. So just because one exchange made up a name in order to make the crypto traders, describe something, it doesn't mean that it's a global standard. And what it refers to is your entire account balance is on the line when you enter a leverage trade. And the leverage on that trade is different based on how much you're putting into that trade. And it's basically dynamic. That is borderline standard in traditional markets. See, the other thing that bothered me in the BitMax's trading view is like one contract on BitMax is like $3 or whatever the hell it is. It's like insanely small, which means you have to trade thousands of contracts. That's not how traditional futures work. For example, one contract on a CME future is 5 Bitcoin worth of leverage. And I'm a traditional trader. I'm not it's different. So if you look at, and I've talked about this before. So if you look at ES futures spec, and if you don't understand leverage in traditional markets, but you happen to understand that in crypto, it doesn't make you smarter than other people. It just means you've specialized in one asset with non-standard leverage parameters. So if you look at the spec of the S&P 500, you know what? I think oil would probably be easier. Like, I hate the E-minis because it's 12. I'm gonna use where are there other assets? View another product. Okay. I'm gonna look at oil. Oil's the simplest one because it's 1,000 barrels. Jesus. Okay. I'm just gonna Google it. CL futures spec. Okay, so here it is. So one oil contract is 1,000 barrels. It should say that somewhere here. So here, so 1 penny move in the price of oil is $10 in your account's portfolio. Oh, there it is, 1,000 barrels. First line, I'm an idiot. So what does this mean? This means that when you purchase one futures contract, you are responsible for 1,000 barrels of oil. Now, let's go to the chart of oil futures. Now, keep in mind, the purchase of one futures contract is 1,000 barrels of oil. At the moment, the price of oil is $43.16. When you buy just a single contract, you are on the hook for 1,000 barrels. So what does that mean? What does that mean? If I take one of these, and we're going to take the current price of oil, if oil moves $1, we're at, you know what? I'm gonna put it at a round number. We're gonna go up. We're gonna go from 43 to 44. I'm on a 10-minute chart. Let me go to the hourly chart. Okay. If oil moves 43, let's say you bought oil at 43. Okay. And you caught this move. Oh, wow. Okay. Hourly oil hasn't been volatile. And oil moves to 44. It's a 1 hour chart. Oil moves to exactly $44. It's not easy to explain leverage, guys. It's really not, especially when you're not looking at the chart and you're not looking at and you're not like doing it on a broker. If oil moves $1, your portfolio will make or lose $1,000. Okay, so what is the leverage on oil? Because right now oil is in the $40 range. So oil moving 2.32% will make or lose $1,000 in your portfolio. So now you have to calculate how leveraged is your oil trade. Well, you can do the math. It's at 2%, right? So the oil trade is a $1 move is a 2.32% move. And if and all you need to trade this is $5,000 approximately. Let me see what the margin is. There should give you a margin amount, but they are not. It may be, I thought it was standard, but it might be exchange specific. You can also probably Google it. They used to show you the margin, but they don't anymore, which is weird. Because I thought there was standard and regulated. But I'm going to assume it's approximately $5,000. So all you need is $5,000 to enter this trade. Okay. Now, keep in mind that if you have $10,000 in your account and you enter this trade and suddenly, and you bought just one barrel, one contract for 1,000 barrels, but it happens to move $20 or $10, that's $10,000. You are wiped out, because even though you only bought one contract, your entire account is on the line if the move starts going against you. Okay, now that is what I guess these crypto exchanges are referring to as cross leverage. That is just the normal way of trading in traditional markets. It's just the way it is. So naming something that never had a name before doesn't make the crypto space any special. It's just leverage trading. Now, oil moving $10 when it's 40 is, not very common. However, when oil is over $100, moving $10 is a lot easier. So the leverage, you're still buying 1,000 contracts. So just keep that in mind, that let's say oil is $200 a barrel. When oil is $200 a barrel, when it's $40 a barrel, you need a 2.5% move to make or lose $1,000. But when oil is $200 a barrel, you only need 0.5% move to make or lose $1,000. So do you see the difference here? Because you're always buying 1,000 barrels and your margin is always approximately $5,000, your ability to lose 20% of that margin is at a different percentage change of the price. Now, Bitcoin works the same way when you enter a trade. Now, when you say cross margin, you mean that your entire account could be on the line. Now, there is another way to trade. And when I was trading, I was not using cross margin. I did not want to put my entire account on the line. Well, okay, let me back up here. The smart way to trade is to always put your entire account on the line. But you should not have all of your money in your account, because I do not trust crypto exchanges. So let's say I wanted to trade with 10 Bitcoin, but I don't want to risk more than 1 Bitcoin on any given trade. That means I should only have 1 Bitcoin in my crypto trading leveraged account. And the other 9 Bitcoin are in my own wallet. And then if I lose that Bitcoin, I transfer another Bitcoin in to trade. But if you have all 10 Bitcoin in your trading account, which is not advisable, and you only want to lose 1 Bitcoin on that trade, what I would do is I would not use cross margin, because you can mess up and you can fall asleep and it can move against you and it can wipe out your whole account. So instead of using cross margin, and not all exchanges let you do that, by the way. Deribit does it differently. Deribit lets you have sub accounts to resolve this issue. But you can just set up, I'm only risking this 1 Bitcoin. And on this 1 Bitcoin, I am entering a 10x leverage trade. So my 1 Bitcoin of risk is leveraged 10x. That means that if Bitcoin moves 10% against your position, you lose your entire Bitcoin. If you enter this trade with 0 leverage, you need 100% move against you to lose the entire Bitcoin on that trade, whether it's up or down. So Bitcoin, if you're long, Bitcoin has to go to 0 to lose your entire Bitcoin. If you're short, Bitcoin has to double in price. Go up double in price if you're no leverage, in order for you to lose that entire Bitcoin. Now, if you're 10x leveraged, Bitcoin only needs to go up. If you're 10x, Bitcoin only has to go up 10%. If you're 20x, Bitcoin only needs to move 5% against you to wipe you out on that trade. So the trade that I was making last time I made the trade in Bitcoin was a 10 or a 20x leverage trade, knowing that if the price moves, what was it, 10% or 5% against me, it wipes out my entire account. Okay, so that's how leverage works. So personally, I'm used to the concept of cross leverage, because that's how I've always traded in traditional markets. I like the idea of, you still have to set your stop losses, but those stop losses could, screw up. The exchange could stop functioning. They could do whatever. So this is another reason why I don't like to trade on crypto exchanges. It only takes one mistake to wipe you out, and that mistake could be the exchange's screw up. And there's nothing you can really do about it. Right, if you take on a 125x trade, then less than a 1% move against you wipes you out. But in cross leverage, the rest of your account is at risk. And the solution to that is have stop losses and don't have too much money in your account. Now, stop losses in traditional markets are very, very liquid. Stop losses in crypto, who the hell knows, right? Depends how liquid your exchange is, depends how functional your exchange is. They tend to go down when you need them the most. I actually liked defining my risk. Everyone has different risk strategies. So when you define your risk that you're only gambling 1 Bitcoin on a trade at 20x leverage, then a 5% move wipes out your Bitcoin. So even if you have 9 additional Bitcoin in your trading account, those Bitcoins are not at risk on that trade. But if there is some crazy thing happening and the price of Bitcoin goes up 40%, it can wipe out your entire account if you were short at that same 20x leverage. Now, to me, cross margin and the actual leverage you take on, because back in the day when I was playing around on these crypto exchanges, you had a little sliding bar where you can choose the amount of leverage you have. See, I can't even log into these because according to the terms of these exchanges, I can't even use the testnet. So I'm following the laws, guys. And this is the other problem. It's easy for anonymous Twitter trolls with 500 followers to criticize me. But everything I say is criticized. So when BitMax says, I am not legally allowed to use their testnet with fake testnet, not even real money Bitcoin, I'm going to follow that rule because I can get in a lot of trouble if I don't because I'm a public person. So that's my life. If you don't like it, that's fine. But in order for me to stay a public person, this is what I have to do. I have to follow the rules or my lawyers are not going to be very happy with me. Well, actually, they'll be happy. They're making a lot of money. So I'm following proper advice and I'm staying away from it. I already have a YouTube channel about crypto, which is a borderline case. I'm not going to get myself in more trouble. So you still have that slider where you can choose your leverage. Look, I'm not going to, and every exchange is different. I've never traded on Bybit, guys. I never have, because by the time when Bybit came out, the rules and regulations were clear. I can't trade there. So I'm not going to. And I don't know how Bybit does it, but back on BitMax back in the day, there was this sliding bar where you can choose your leverage. It started with only 3x. That was their max. And you can just select it. You can select it. So I don't want to say that Salsa didn't explain it right, but it's also possible because I have trouble explaining it because I have not traded under that under those I guess options. They didn't exist back in the day. So you should still be able to select your leverage with cross leverage. But I could be wrong. Like, I don't know. Cross leverage means your entire account's on the line, but you should still be able to, based on your either based on your position size or based on a straight up position amount plus a leverage selector, you should still be able to control how much leverage you have on that position while still being, you know, in the cross where your entire account is on the hook. There's no A in BitMax. Sure. You guys know what I mean. Right. Someone says, except Deribit, all major exchanges, they have the slider, which is what I was trying to get out of, again, I could be wrong, but my question to Salsa was not whether he was using his entire account on the line for the trade. It was what level on that slider he was using. And he did not answer that question, which made me look like an idiot. But in reality, that's what I wanted to know. I wanted to know where on that slider he is. Well, yeah, you have Binance US, which may or may not have leverage, but I don't support Binance. And then you have INX coming out soon, and I don't support INX. So I'm not going to be trading on crypto exchange. I like my options trading, guys. I don't have a problem with that. I'm looking at your live chat now, guys. Yeah, see, I don't even want to Google BitMEX or other exchanges. Like I don't want that in my search history. I remember beta testing back with like Play Bitcoin, like not even real, not real money. I remember beta testing the BitMEX platform back in the day, and there was a trading competition. It was global, similar to what Bybit's doing. I came in, I think, fifth, fourth or fifth. I think like fifth or third. I don't remember. So I came in the top five, 3, 4. I came in third, fourth, or fifth. But when they adjusted my trades for like risk returns, like how risky my trades were based on how much money I've made, I forgot what the name of that metric is, because I don't even know what that metric is. I came in first. So I came in first for performance, risk-adjusted performance. I came in first in the competition. That was back in like 2014. It was a long time ago. I will say it wasn't 10,000 people trading. It was a lot less people. Tone, he was saying he used 100x leverage. Well, that's what I thought, but he made it sound like he doesn't. So then I wanted to know where on the bar he was, where on that slider he was. And I don't even know if, I know BitMEX used to have a slider. I don't know what the hell they do now. And I know that Deribit doesn't have a slider because they use a different method. But I don't know what Bybit has. Like, I don't know if they do or don't have the leverage slider. So you can still choose your leverage while still deciding if you are risking your entire account to back up your trade or not. So those are two independent things. At least to me, they are. To me, the concept of cross and the leverage you're using are two independent things. But again, I don't trade on these crypto exchanges, so like don't take my word for it at all. If you're trading there, read their like descriptions, read their manuals. If you're just gonna start trading without reading what the definitions of these terms are, you're gonna get yourself in a lot of trouble. Yeah, Sharp ratio. Thank you. Bybit has both fix and cross. Great. But fix and cross doesn't automatically decide your level. You still have a slide bar, right? Like Bybit still has a slide bar to choose your amount of leverage, whether you are in fixed or in cross, correct? It's hard. Answer that. I know videos are always on like a 30-second delay or something. Right. BitMEX is having KYC as of August 28th. Yep, it's coming. Oh, it's hard agrees with me. Right. So I'm not wrong. And the trolls in crypto just don't get it. Right. Any percent leverage can be used on cross depending on your position size. Well, right, but they also have a slider, right? So your position size doesn't dictate your leverage. Like, you select your leverage, you choose your position size, and then you decide whether you want the rest of your account to back up your trade or not. Look, if I was actually using these platforms, I would be able to explain it to you, because that's my job. I teach people, but I'm not using them because it's, unfortunately, I'm in the wrong country. All right, guys. I do have to get going. I can't believe it's this video has gone on for this long already. It was way longer than I expected. Like, if I was designing it, I would let people choose the amount of leverage and give them the option of fixed versus cross. Like, do you want to be fixed to your position size at certain leverage, or do you want to just let your entire account back up your position at set leverage? And you should still always set a stop loss. All right. I'm going to end it here. But like I said, I could be totally wrong on this, because I don't trade on those exchanges. I know how leverage works in traditional markets. No, I don't use Brave browser because they have a scam coin. And Joe Rogan recommends it because they paid him. And the reason why, probably, I'm assuming they paid Joe Rogan to recommend it, if Joe Rogan recommends it. And the reason why they were able to pay him is because they printed a bunch of Brave tokens. And that's how they became very rich, to then pay people like Joe Rogan to promote their platform. So no, I do not support Brave. I think Brave is, I will never support Brave. For the same reason, I'll never support Binance. Because they're cheating. And someone sent me a good article about that. Hold on. I know, I'm supposed to be ending the stream. Where is it? Here. So here. So Binance and companies like crypto.com, they're basically cheating, similar to this. So if you want to read in a good article, Google this. This basically explains the bullshit that goes on. I mean, the LOP situation is very different than the Trace Mayer situation. Very different. They're not anywhere near the same. And we talked about INX on yesterday's news show, so check that out. So yeah, so read this. Read the story of the Travala. If they have a token, then that's a scam. If they don't have a token, then it's just unethical what they've done. So check it out. So Travala, Binance, and the dark side of crypto. So it was a very good article. It was long, it's very good. You can check it out. I should remember to add it to the video description. All right, and once again, guys, I am heading off to Dallas, Texas for BitBlock Boom tomorrow. So I will be there this weekend for the event along with Jimmy Song. Looking forward to seeing Matt Odell. Parker Lewis writes amazing articles. Lots of really cool people. It looks like Bitstein and Pierre Richard won't be making it. That's unfortunate. Saifedean won't be making it this year. This was a great event last year, but hey, I get to see some Bitcoiners, so it's awesome. So I'm happy. Okay, so we're back to the leverage part. Bybit does not allow you to adjust your leverage with cross-leverage trading, but I can't figure out what the leverage is fixed at. Well, it would depend on your position size. So your position size kind of fixes it, but you have to calculate it yourself. Well, this article doesn't talk about why Binance is scammy. This article basically talks about why what Travala did is unethical. But I'm not sure if this company has a shitcoin or not. The reason why Binance itself is not scammy, Binance is not running a scam. The token is the scam. The token itself, the creation of the Binance token is the scam because that token should not exist. The BNB token. Right. So when I'm asking the question, what is your leverage? And he's using cross, he's not able to explain what his leverage is because it's different every time, and he's not potentially not even calculating it because he's just comfortable with he knows what to trade. But my question was very specific. But unless you are actually calculating your leverage with every trading, he could say, well, it's constantly different because my position size is always different. But if you are trading cross and you are always trading the same position size, you should know exactly what leverage you have. Leverage in cross is the position size compared to how much you have on the exchange. Right. So if you keep that ratio the same, you'll always be trading at the same leverage. As the amount in your wallet goes up and your position size doesn't go up as fast, your leverage is obviously lower. Which sounds identical to how oil futures contracts work. But there's no such thing as cross, like ask an oil trader what cross leverage is or cross margin is. Like they'll have no idea. I've never heard that term before crypto. Actually, I've never even heard that term in crypto until like a year and a half ago or like 2 years ago. High leverage is safer than low leverage. No, I don't agree. I don't disagree either. It's up to you. High leverage is risky for some. High leverage is safer for other people. It's how you use it. It's how you use it. You know, it's like a car. You know, it's safe for, it's useful for some, and it's deadly for others. It's how you use it. All right, guys, I gotta get off the stream. I gotta do other shit. If you want to support my work, please check out the videos, the educational videos on technical analysis and risk management. But no, I don't talk about leverage in crypto trading because I don't trade crypto, but I talk about risk management in general, which are important lessons that if you don't learn, this is how you end up getting wrecked. And also, if you want to support, check out the affiliate page. You have a couple of exchanges, but please read their terms of use and also their leverage rules. You have Deribit, Bybit, LVL. Those are the three that I have on here. Okay. All right, guys. Thank you all so much for watching, and I will see you all on the next one. Bye, guys.